Hey traders, welcome back. If you're aiming to level up your Elliott Wave game, you're in the right place. Last time I broke down the 5-wave impulse structure, that classic signature of a strong trend. But here's the thing, trends don't move in straight lines forever. The market needs to breathe, to reset, and that's where corrective waves come in, especially the legendary ABC pattern. Mastering this could be your edge. So what are corrective waves? Think of them as the market taking a pit stop. Instead of charging forward, price pulls back, moves sideways, or just gets a bit messy. In Elliott theory, corrections usually unfold in 3 steps: wave A, wave B, and wave C. Unlike those clean, powerful impulse waves, corrective waves are sneaky. They're full of fake outs and traps. If you've ever bought thinking a pullback was over, only to get stopped out, you've met a corrective wave. Let's dig into the ABC pattern. I want you to picture it like this. Wave A is the market's first warning sign. The old trend is losing steam, and sellers, or buyers in a downtrend, start to test the waters. Then comes wave B, and this one's tricky. You'll see price try to bounce back, as if the main trend is about to resume. But it's a fake. Wave B almost always fails to break the previous high or low. Finally, wave C jumps in and finishes the job, pushing price further than wave A did, and usually completing the correction. What you get is a zigzag or maybe a flat formation, a kind of sideways movement before the original trend kicks in again. Here's where things get interesting. There are 3 main varieties of ABC corrections you need to know. First, the zigzag. This one's sharp and obvious, a 5-3-5 structure. Think of it as a quick, deep pullback against the trend. Second, the flat. These are sideways, almost boring. 3 waves, but they go more sideways than down or up. It's a 3-3-5 structure, and it can really chew up impatient traders. And finally, triangles. While not a classic ABC, triangles often appear inside corrections, especially in wave B or in a wave 4. They're choppy, full of fake outs, and they signal indecision before a breakout. Let's jump to the charts for a real example. Look at this setup. You see the trend pushing up, then suddenly price pulls back. Wave A drops, wave B tries to climb but stalls out. Then wave C comes in, finishing the correction. Notice how these 3 moves make up the ABC structure. Once C completes, look at how the trend resumes. Spotting this pattern in real time can save you from jumping in too early, or missing the next big move entirely. A few strategy tips. If you can confidently label an ABC correction, the end of C is often the prime spot to enter for a trend continuation. Combine that with Fibonacci retracements to target those high-probability reversal zones. It's all about patience. Let the market show its hand, and then make your move. To wrap up, ABC corrections can look chaotic, but if you train your eye, you'll start to see the order inside the mess. Study your charts, practice labeling, and don't forget, in the next video, I'll show you how to merge Fibonacci levels with Elliott waves for even more precision. Stay sharp, and happy trading.